Hello folks, welcome back. This is Carrie's Trading Institute, and in today's episode I'm going to give you my analysis on the dollar index and foreign currencies so that you can use this to frame your setup during the week and intraday setups. Okay, so this is the monthly time frame of the dollar index, and what I'm seeing here is that price had currently traded into 50% of this entire range. Remember, we outlined this range using Fibonacci between this low, this last swing low to this swing high. This is 50% of that range. This black line is 50% of this entire range, and price is currently in that 50%, so that is relatively equilibrium. Below 50% is discount, so we see price rejecting off from 50% of this entire range, and there's another block here, a bullish order block that confluences with the 50%, which is the equilibrium. I really like to see a bullish retracement, okay, either into this sell side imbalance, buy side inefficiency before we continue down, or we like to continue up to take out buy side liquidity residing above this relative equal highs and the pool of sell side imbalance and a buy side inefficiency residing on our left side of the monthly chart. But this is a macro perspective, so let's go to the weekly time frame and see what we can frame this week. So this is the weekly time frame, and what I saw on the weekly time frame is that price had traded into that 50% of the monthly range. Okay, there's a bullish order block, so price currently traded into that bullish order block, and so we would like to see if price is going to continue bullish or going to reprice into the monthly sell side imbalance and the buy side inefficiency. You can see it outlined here also on the weekly time frame. Okay, I would really love to see a repricing or a retracement into these levels before we continue down or we continue to the upside. So let's go to the daily time frame. We are going to find out more information on the daily time frame. Okay, so I saw something very significant on the daily time frame. It's called SMT divergence between the dollar index and the GBPUSD, which is a foreign currency. Okay, so price is failing to form a lower low on the dollar index, but it has formed a higher high on GBPUSD. As at today London session, price failed to take out this previous low, but it took out the highs on GBPUSD, which confirms that what we have is a smart money divergence, meaning that the dollar should reprice to the upside either into these levels of sell side imbalance and the buy side inefficiency, or into this last buy side liquidity, which is the previous 20-day high. Okay, this is where liquidity is residing, so I would like to see price trade either into these levels, the other block fair value gap, or the buy side liquidity residing above here, and trade into the weekly sell side imbalance, buy side inefficiency. Okay, so I was looking to go long on the dollar and sell GBPUSD because of the smart money divergence. What is smart money divergence? Is when you have conditions where the dollar is failing to form lower low and is forming higher high on foreign currency, or the dollar is forming higher high and the foreign currencies is failing to form lower low but it's forming higher lows. That is a smart money divergence. Okay, it's a divergence between the underlying and the benchmark. So the benchmark is the dollar index, the underlying asset I want to trade is GBPUSD. So let's quickly go to the 1 hour time frame and see if we can have a trade setup. Okay, so on the 1 hour as at London session, this was where I framed the trade setup. It was from a 15 minutes perspective. So on the 1 hour, we can see that price had already created an expansion to the upside, confirming that we should be buying the dollar and selling foreign currency. Okay, where will I be looking to go long? I'll be looking to go long when I see the dollar reprice into this internal range liquidity, which is the fair value gap. Okay, this large range fair value gap is where I'll be looking to go long, but this also can be refined into the 15 minutes time frame. So I've refined these levels into this fair value gap of the 15 minutes time frame. I would like to see the dollar reprice into this level as the foreign currencies also reprice into the internal range liquidity. Then I will go short on foreign currency and go long on the dollar. So this is the GBPUSD daily chart, and look at this. Previously we outlined from a weekly perspective that this is our institutional order flow entry drill. price tested it and we tested it for the second time, okay, and we see a smart money divergence at that level. Price had formed higher high on GBPUSD, but it has failed to form lower low on the dollar index. So this engineered the reversal I'm seeing and anticipating on GBPUSD. Then on 15 minutes time frame, so on 15 minutes time frame, you can see that price had created an external range. I'll be looking to go short once price trade into this internal range liquidity, and also because today is Monday, so I'll be looking to go short between Tuesday, Wednesday on GBPUSD. So guys, these are my expectations on the dollar index and foreign currency. If you're a new viewer, don't forget, click the subscription button and hit the notification bell so you stay updated. Until next time, I wish you good luck, good trading.